This allows us to go independently and allows us a backstop, which means that we can choose whether to develop this on our own or with a larger partner, and we'll do whatever is best for shareholder value as that process.
Hello, you're watching Proactive. I'm joined by Zephyr Energy CEO Colin Harrington. Colin, very good to speak with you. Let's start with today's news. Could you give us a high-level overview of the announcement and explain why this letter of intent with Atlas represents an important step forward for the Paradox project?
Sure. Good to see you, Stephen. Thanks for having me on today. And I don't think it's hyperbole to say that this represents not just an important step. I really view this as a seminal moment for the next phase of the Paradox project. It's an affirmation that the success that we've had to date translates into a much broader pool of institutional funding for the Paradox. We've demonstrated that before by bringing in a non-op partner to fund a large piece of the 32-6 well, but this funding represents a whole different level, an entirely new pathway that demonstrates the right to market our future molecules can be monetized today without giving up asset ownership and without any PLC level dilution. So, in a nutshell, the LOI sets out a framework for a prepaid commodity purchase agreement that would fund up to $15 million in pre-production financing for the Paradox project. It's done with Atlas, who we've had a very long-standing relationship with. They've marketed all the barrels from our project, from our production tests since 2021. The structure gives them marketing rights over the hydrocarbons from an agreed upon area. It allows us to retain 100% of our working interest, which gives us flexibility for a farm in if we like to go that route as well. And it allows us to do this without giving up any equity dilution. The funding will be drawn in milestone-based tranches, and it's repaid entirely from marketing fees on future production. So again, no dilution at the asset ownership level, no dilution for shareholders. It allows us to accelerate our infrastructure to complete the well workovers. Importantly, this is critical. We're now evaluating much larger processing solutions. We had envisioned 5 million a day. We could certainly do more than that with this funding. And it also lets us plan for new drilling and use funds towards the drill bit rather than infrastructure. So really, really, beneficial from our standpoint. And we're excited to get the documentation finished and bring this deal over the line.
Colin, as you said, Atlas has been involved with Paradox for several years. What gave him the confidence to propose up to $15 million in pre-production funding? What message does that send to investors?
Yeah, I mean, I think what's great is they have firsthand knowledge of our production potential and firsthand knowledge of the quality of the barrels that we produce. They've marketed our liquid volumes to all of the major Salt Lake City refineries, as well as other markets. And they've done a terrific job for us in achieving strong pricing. There are other really good synergies here with Atlas. They have a very well-developed gas solutions group that's well positioned to help us build out our processing. And it's a nice overlap in both businesses that their gas solution business combined with our processing needs will really help us, again, accelerate the addition of volumes here at the project. But on a broader basis, their willingness to provide $15 million or up to $15 million before first gas, it does show, deep confidence from a player that's been in this market more than 40 years. They've got very strong marketing capabilities, an active trading desk. They've got access to a broad network of buyers. So we feel confident that they're well positioned to get us maximum value for the hydrocarbons. So it demonstrates that industry players in the US see the Paradox as a significant development opportunity. We ran an exhaustive process here, from the largest marketing firms in the world to local Utah marketers. and had great response, great outreach. But we view this as the right way forward. And lastly, it's just a validation of the technical work and progress that we've made since 2021.
This is non-dilutive funding available before first gas. How does that change what Zephyr can execute operationally over the next 12 to 18 months?
Well, it allows us to both complete and to upsize the critical infrastructure we need to bring the project forward. It'll do things not just on the infrastructure side, but fund workovers on the existing wells that are there and prepare them to be tied in and into our existing gathering systems. It enables us, as I said before, to potentially implement larger processing solutions, which will accelerate volumes, accelerate cash flows, and it allows us to move from internal funding of that CapEx and divert, for lack of a better word, some of that funding towards the planning and drilling of future wells. So it really allows us to start looking at the future more granularly with our capital needs set, and strengthens not just our ability to plan and do future drilling, but also really strengthens our position while the farm out discussions continue.
You've mentioned that the CPA would be repaid from production and doesn't involve selling any working interests or issuing equity. Can you talk about why that's advantageous for existing shareholders?
Sure. As I mentioned before, it's entirely non-dilutive at the asset level, at the PLC level. No equity in, issuance, no sales of working interests. It looks more like debt, but it's repaid from future production. It gives us the ability to access significant capital before first gas, which is typically very difficult to secure without some form of dilution ahead of time. Obviously, we're pushing towards first gas as quickly as possible. But really, it helps us leverage a counterparty with a much larger balance sheet who's already familiar with our production volumes, our barrel quality, and the logistics of taking both gas, NGLs, and especially the condensate barrels from this particular location. So again, it maintains a lot of upside for our shareholders and really pushes the project forward to its next phase. And lastly, and this is also critically important, it envisions a path whereby, upon mutual agreement with Atlas, we could access additional funding for future expanded infrastructure and/or future drilling capital. That is something that we'd obviously like to be able to ascertain as we go through the next round and we think about accelerating drilling as much as possible.
Colin, the LOI sits alongside the ongoing farm out process. How do these two initiatives complement each other, and how do they shape the different development pathways available to Zephyr?
Yeah, so absolutely correct. We've been running two parallel processes. One related to the marketing rights, which is now crystallized in the form of the Atlas LOI, and then another related to bringing in an industry or financial farm out partner to the larger project. To get to this point on the marketing front, we ran a very comprehensive process, as I said, from the world's largest marketers down to local gas firms. We think Atlas's history of success, long-term track record speaks for itself, especially given their familiarity with the project. But overall, the marketing and the farm out processes are designed to complement one another. The LOI explicitly contemplates the completion of a farm out. There's strong interest, lots of activity in our data room in the farm out process with a number of parties. That will continue on as we conclude and document the Atlas transaction. But by and large, it's the Atlas financing structure to be supportive of a farm out, while also, and this is critically important, giving us the flexibility to develop the Paradox independently. We're going to do whatever we believe is most value creative for our shareholders. We'll say that again. This allows us to go independently and allows us a backstop, which means that we can choose whether to develop this on our own or with a larger partner, and we'll do whatever is best for shareholder value as that process. We're not reliant upon one single path forward. We can pursue whatever route or combination of routes delivers the best outcome for shareholders. And we'll provide updates on the farm out process and the completion of the Atlas agreement as each progresses.
Colin, anything else to note regarding Zephyr's underlying business?
No, I would just say, the non-op business continues to perform exceptionally well. The acquisition we did last year has already paid for itself, with the vast majority of reserves still available for production. We are largely unhedged at this point, so we have the benefit of the current commodity price environment, and we're feeling very well positioned to take the next steps here. So all in all, I couldn't be more happy with how the business is positioned today, and we look forward to giving more updates as we can around both timeline for first gas as well as completion of this agreement and the farm out agreement to come.
Colin, congratulations on this latest milestone. Thank you very much for your time today.
Really appreciate it, Stephen. Thanks again, and we'll talk soon.
Colin Harrington, the CEO of Zephyr Energy.